Hello and welcome to my channel. I plan to record my journey towards financial independence and retire early in this channel. Currently, I mainly focus on sharing my Canadian dividend stock investment journey and those stocks in my portfolio. This is the way that money works for you and generate more money. In the future, I will also add contents introducing products that saves you money. So if you are interested in these topics, hit the like button to let me know. Subscribe to my channel and turn on the notification to get the latest update. And now, let's get started. Do you want to invest in real estate? But you are afraid that you don't have hundreds of thousands of dollars at hand for down payment? Do you want to collect monthly income? But you don't want to deal with tenant issues? Then you can look into REITs, Real Estate Investment Trust, which allows you to get involved into the real estate field without actually buying entire buildings. Instead of paying a huge number of money to buy an entire real estate, you can buy REITs like stocks so that you own a small portion of the real estate. Unlike physical real estate that you will hold them for years once you buy them, REITs are more liquid, meaning that you can sell them whenever you want, just like selling a stock. Compared to buying a single house, REITs can be quite diversified. You can invest in REITs that focus on medical buildings, office buildings, retail buildings, residential buildings, and so much more. And the REITs need to pay a minimum of 90% of their taxable income in the form of shareholder dividends each year. That's why most REITs offer high and juicy dividends. And they offer it monthly. The REIT we are looking at today is H&R Real Estate Investment Trust, which is a Canadian open-ended real estate investment trust specializing in commercial real estate and based in Toronto, Ontario. It is the third largest REIT in Canada by market capitalization, which focuses on office, retail, industrial, and residential properties, and its properties comprising over 40 million square feet. If we look at H&R's profile, we can find that by geographic region, H&R focus on both Canada and the United States. So compare with the REIT in my last video talking about RealCam, which mainly focus on the Canadian market. It's nice to see that H&R is more diversified, not only in Canada, but also invested in our southern neighbors. And if we look at the type of assets of H&R, we can find they mainly focus on four areas, that is office, retail, residential, and industrial. And if we look at the rent collection by H&R, we can see overall their total rent collection is pretty high. It's around 94% in January this year. So basically, the tenants of H&R that has been impacted mostly by the pandemic is the retail sector. And H&R is still able to collect rents from 86% of their retail tenants. So it's because that H&R has this kind of diversified portfolio that they have invested in four different areas that makes them to have the ability to have a strong and stable rental income. And even the pandemic hits, they were still able to have the total rent collection over 90% and keep increasing and stable at around 94 and 95%. And if we look at HR's top 15 retail tenants by revenue, you can see there is a lot of familiar names here, like Giant Eagle, Canadian Tire, Shell, Walmart, Metro, Biocanada, Hudson's Bay, Best Buy, Gap. These are those big stores that we usually have, right? So if we know that H&R are actually the landlord of those companies, we feel safer for H&R's income, right? And here's the map of the properties that H&R have across North America. So we can see in Canada, it's heavily focused on Toronto, which definitely I think is the correct direction because that is where we have most populations and where a lot of new immigrants will flood in, and that will be a good decision for any real estates. And if we look at their properties in the south, we can see that they have diversified properties in different states. And as the vaccines rolls out, I believe people will go back to work, the retails will reopen again, So definitely that will be a good sign for H&R. Currently, H&R still have a lot of development projects undergoing, and their largest development project is River Landing, which is an urban infill mixed-use development site in Miami, Florida. And if you remember my video talking about RealCap, probably you still remember what is mixed-use site means. Basically, it's a building that not only have one functions, but has a variety of functions. For example, in one building, you can have retails, offices, and residentials together. Such mixed-use buildings is kind of the future direction of real estates. And we can see that H&R will have 100% ownership interest on this project. And they also have a lot of plans for future intensifications. Take the Stanford Grove Village as example. With their existing mall here, they are planning to build more residential rental units around this mall. And also a public park is also proposed around this mall so that people living around here will have very easy access to public transportation, shopping, parks, and other neighborhood amenities. And this means the tenants who live in there will have a very convenient life. And I really like this kind of strategy that H&R is applying. That is to build residential units around the malls that you already own. This not only make the tenant's life easier, but also will make the rental units more appealing, right? As of the time I record this video, the current price of H&R is $15.15 per share. So for today, it's actually around 2.4% down. But today, every stock's price is down. Today is just a red market. So we can see the market cap of H&R is 4.3 billion, which is a really huge number. Its beta value is 1.88, which means the price of H&R is volatile, as the number is higher than 1. So usually a beta value lower than 1 means the stock price is less volatile than the market, and a beta value higher than 1 means it's more volatile than the market. The forward dividend is $0.69 per share per year, and the dividend yield is around 4.5%. So actually, H&R cut their dividend during the pandemic, so it's reasonable for us to believe that as the pandemic passing by, the dividend yield of H&R will actually be increased year by year. And from the chart here, we can see that H&R is slowly recovering from last year's March crash. And their price is kind of steady and slowly growing up. And from H&R's historic price chart here, we can see that actually the price of H&R haven't recovered to the pre-pandemic price yet, right? So even if we look at the lowest price for the recent 10 years, it still didn't reach the $18.85. So I believe the price of H&R is still at a discount. It's not too late to have this stock in your portfolio or keep buying more of these stocks. Now let's go to my portfolio and see how many shares of HR I have. So in my TFSA account, I totally hold 39 shares of H&R, and the total value is $590. My average buying price is $14.45, and it takes up around 5.12% of my entire portfolio. Actually, this percentage is a little bit high because generally speaking, we don't want any individual stocks to have over 5% in our entire portfolio. So I think I will just try to keep this percentage at around 5 or 6% because in my own opinion, I do think there's kind of a guaranteed increase in H&R's share price. So I'm still thinking of buying more of it in the future. For the total return, H&R is around 5% up, and I have gained around $27 from it. So have you heard H&R before? What do you think of this stock? Do you already have it in your portfolio? Or after watching this video, you are considering buying it or put it in your watch list? Please leave a comment to discuss with me. Thanks for watching my video. If you like it, hit the like button to let me know. If you are looking for a zero commission fee platform to invest stocks, I recommend you Wealthsimple Trade. If you are looking for high interest saving account, Wealthsimple Cash offers 0.77% interest and EQ Bank offers you 1.25% interest, which are all higher than the big banks. Check out my referral links in the description to get a referral bonus when opening these accounts. Thanks again for watching my video, and I'll see you in my next video.